Hello, everyone. Good evening, good morning, and good afternoon to all of you all around the world. Nice to see so many of you here already. Yeah, Clive is going to come on tonight. Rudy is over here behind me, as you can see. It's raining a little bit right now. Good morning, Rumpelstiltskin. Good morning, Goldie family from Florida. Olivier Leroy. Bonsoir, Olivier. Jake Thompson, Urban Sombrero, Endurorama, Dutch Libertarian, Low Tech, Alain Roy. Alain Roy wants to ask Clive a question about CBDCs. Fine. Of course, you can ask him a question. You don't have to ask me permission. Catherine Hernandez from Palm Desert, California. Niels Hun Dynasty. Des Smith. James Bond's here. Saying sad to hear sudden closure of two Pontins parks in the UK with no explanation for families or staff. Now the awful owner, Britannican House, and more asylum seekers. Yeah, and we're paying for it. That's right. I was telling my wife the other night, I was invited for dinner in London, and I was walking from Charing Cross to the place where I was going to have dinner, and I saw a few people. It was really cold. They were sleeping rough out in the streets, and they had their heads covered with sleeping bags. But yeah, we can finance these illegal migrants and put them in four-star hotels. It's just a screwed up system we have right now. The whole political system. Again, I will quote Frederick Bastiat. He said the state is the fiction under which everyone thinks they can live at the expense of everyone else. Yeah, that's the state. So we don't need a state. Yeah, anarcho-capitalism. Goldie family, Dutch libertarian. Rick was here. Michael Kennedy says, hope Clive talks some sense tonight. Scoobyism, all done with the eye doctors. Yeah, I mean, it's pretty good. I'm still putting eye drops. I think I'm going to have a checkup in a couple of weeks, but the last one went really well, and it feels good. My right eye. I don't feel anything like a pressure on it or anything. Sounds like a great vacation destination. Yeah, I've never been to one of those. Richard Spiller, yeah, I'm doing well, thank you. I played golf this morning. It wasn't very nice, but it rained a little bit towards the last 3, 4 holes. It was a bit wet, but all in all, it was nice. Here in England, if you uh, only wait for good weather to do anything, you won't do anything. So you got to get out there. I saw there's a lot of snow in Switzerland. My sister put some pictures on the WhatsApp. They've got a lot of snow, and it's relatively early. So yeah, it doesn't look the world like the world is boiling, like the head of the UN said a few months ago. He said we have global boiling, and we have the coldest beginning of December in 20 years in Europe. So much for that. Hannah says, hi, Mario and Rudy. Happy Sunday. Thank you. James H. Silver Task, 90 likes at the moment. Yeah. Make sure you give the live stream a thumbs up. Wayne Shinton, 2,000 ounces. Is that of silver or gold? 4 inches of snow in Sunderland. Yeah, we didn't get any snow here. Actually, when I played today, the greens were kind of frozen. So you had to judge the shot. You had to hit it a bit shorter because it hit the green and like would roll back quite a bit. Andy Kasprisk says, thank you. Be blessed. Thank you, Andy. Same for you. Steve Dent. I play in the Swindle on the Sunday, and there were 16 people signed up for it on Friday, and only six showed up. So yeah, yeah, acid rain, right? Yeah, they try to scare every decade. There's some scaremongery going on. It's just about control and taxation. Gordon D from Ottawa, Canada. Calais Smilov. So yeah, the title of the live stream, and we'll get to it when Clive comes on, and is a central bank pivot could trigger a major melt up, and we'll see why, in my opinion. I think that we'll see what Clive thinks, and there's a few other things Clive has written on LinkedIn we can look at, and of course, we can take a lot of your questions. Clive is really good at answering questions, and I'm sure he wouldn't mind doing it. The real Scott, can you explain what will happen when the reverse repos run out? Well, not really sure. There's a lot of expectation that something will happen. So maybe nothing really serious will happen right away, but it just means that there's going to be less liquidity in the financial system. That's all it means. So, yeah, so we'll have to wait and see. I'm not like I think it's very hard to tell, but at least you know that something could happen middle of February. I think it's supposed to run out. 125 likes, good. Oh yeah, Rudy had his birthday a few days ago, 1st of December. Cupid stunt. Greetings from Warrington. Paul Harlock. Yeah, hundreds of thousand subscribers by year end. I think that's going to be tough to get there. Right now, the rate of increase of subscribers has kind of increased. Like a month ago, I was only getting about 300, 400 every 28 days. Now it's about 1,200. So who knows? Silver drill pickle from the Permian oil field. Andy Kasprisk, Andy Sheckman mentioned about unclear influence of military, industrial, and silver price manipulation. Will you have time to analyze it? I did actually. I interviewed John Little a few weeks ago, and he spoke about that. Let me see. I can find the link, and I'll put it there. I've spoken about it. Um, and well, I am going to have also Andy Sheckman on Wednesday. I'm going to interview him. Let me see if I can find that video about silver. Where is it? Forgot exactly when it was. Um, that's the thing. You do so many videos, you forget. Let me try to. Let's go back. I don't think it was that long ago. Uh, oh yeah, here we go. Uh, that's the video where I spoke to John Little. There you go. Rudy, everyone's saying happy birthday. um, yeah, gold miners are starting to move. Um, here we go. I think, yeah, Clive's coming on in a minute. Buy Newmont. Yeah, I've got some Newmont. Yeah. Hi, Clive.
Good evening, Mario. Good evening to you. It's a nice cold, well, I would say very frosty, cold day today in
Yeah, there's
Switzerland.
a lot of snow up in the mountains. I saw
Yeah,
some photos.
absolutely. So for the Brits who want to go skiing, Switzerland's the place now.
Yeah, and I went playing golf this morning. It wasn't very nice, but it was better than people thought. Got a bit wet at the end, but it's always nice to go out though and do
Hmm.
something. How are you, Clive? Okay.
Yeah, it's we've been out for a walk, and we have a in our local village. There's a Christmas fair, so my little boy went and sat on Santa Claus's lap and got his bag of sweets.
Oh, that's nice. That's nice. He still believes in Santa, I guess.
Probably the last year.
Yeah. Um, let's see. Yeah, Clive. So the title of I mean, we don't have to just talk about that, but we're gonna look at uh, a, this is what I think a central bank pivot could trigger a major melt up. And I'll give my opinion, and you can give yours. But before we do, some people have a question here. I think it was Alain Roy. I think he asked about CBDCs and whether cash could become like a go-to place, a bit like Gresham's law. If if they brought in a CBDC, if people could rush to cash, going from bad money, people go to good money if there's bad money. But they asked me the question, was Alain Roy the other day, and I said, why would you go to cash? Because cash is bad money too. So here's the question: Gresham's law: physical cash cannot exist with CBDC. CBDC will drive cash out of circulation. Cash has an additional value, anonymity. It's untraceable. Cash will have a value premium and hoarded. But the thing is, cash is legal tender. So if it's not legal tender anymore, it will be worthless, in my opinion. What's your view, Clive? Yeah.
In the UK, they're saying they'll keep cash going for as long out as the eye can see. But I think that there's two things going to happen. One, it's going to some extent wither away as people start to use the digital money anyway. And secondly, there'll come a point where they say you've got to use the digital money for, they'll say, money laundering reasons or crime reasons or something else, and we'll suddenly find we have no choice. And I think that's rather sad for those who are unbanked. I think it's going to be quite difficult for those who aren't very good with the technology. It's going to be difficult for those who have low connectivity. So it's not a terribly good thing for part of the population anyway. But I think we will get to a point where we can only use digital cash. I mean, there's a lot of people like myself who don't think it's a good idea, but I don't think we're going to be having any choice in this matter. But of course, it will still be a money which can be inflated at will, and it'll be much easier to inflate it when it's digitally programmable. They'll be able to inflate it or deflate it or whatever they want to do with it. It'll still be the same old money until something goes wrong with the currency itself, and they have to restart the system with a new kind of money, which would perhaps be gold backed.
Yeah, and yeah, cash. I mean, today, I went to play golf and it's a swindle. So, you put 10 pounds down and then whoever has the best score takes the money and pays the drinks. So it's all cash. I don't know how we do with the cashless society and the swindle. Uh, I personally don't think, yeah, Gresham's law is more to do with money and I mean, technically, cash used to be specie, gold and silver, but now they call paper money. They call that cash. But I personally think that gold and silver will become a lot more important if they take cash away. I think a lot of people will learn the value of gold and silver. That's my opinion. And yeah, and like you said, Clive, if it fails, they'll have to bring in some kind of gold-backed currency. But and the other day I was looking at fiat money inflation in France, and they tried the assignats, and that failed. And then they brought the mandats. And I was reading the other day, I'd forgotten. because I've read this book like years ago, and it said that the mandats were supposed to be gold backed, but before they even issued it, it lost like 40% of its value and it failed completely. So I think even a gold backed CBDC will fail. What's your view on that?
It's only plausible if you could actually take your CBDC to the bank and get a gold coin or a gold bar for it. If they say it's gold backed and you can't get anything for it, it's not gold backed at all. It's just
Yeah.
it's the same as the promise you see on a pound note, which says, I promise to pay the bearer on demand the sum of £1. It's worth nothing. You've got to be able to get your cash in gold, or it's not gold backed.
Yeah. So Carlo Yaboni is asking, do you think Argentina will successfully close their central bank? Well, I'll answer that and then let Clive do it. I don't, first of all, it's not Argentina that will do it. It would have to be the president or the Congress. I think it was you, Clive, who mentioned that he might close this one and open another one. Let's hope not. I don't know. I think it's a bit, this guy sounds good and everything. I think it's very difficult not to improve things in Argentina because it's such a basket case. And what raised some red flags the other day, I saw that he actually is chummy with Bill Clinton, which I don't think is a good sign. So I'll let Clive answer this one now.
I mean, the trouble with central banks is that they have a tendency to get into the habit of printing money and devaluing the monetary system, and this has happened with every central bank which has ever existed since the beginning of time. Even when we were on a gold standard, central banks historically would debase the currency so they could issue more of it and keep the economy going. And also keep the kings or emperors in their wars. So my objection to the central banks is that they use this seigniorage to steal from the population by devaluing the cash. It's another form of taxation, but it's a taxation you don't really notice happening. Will Argentina get rid of its central bank? I think my comment would be that he might not be able to do it on his own, but he'd have to get the support of Congress. And to do that, I think he'll have to run a referendum in the country. And I'm quite sure the Argentinian population will vote to get rid of the central bank. But then is that very wise to do it? I got a feeling he might close down the central bank and open up a new one the next day in the same premises with the same staff, and he'll just basically change the governor, and that'll be it. Of course, the important point would be to take away the powers of the central bank to destroy the currency by printing too much of it. But if they've gone to a US dollar standard, as he'd like, it's not really a relevant point because the central bank won't be issuing any currency.
Yeah, and the other thing as well, if you are going to have a central bank, is to have not to have legal tender laws so that other banks can issue their own banknotes. I mean, that's how it used to be, I think, in England up until I'm not sure. I think it was 1834. It wasn't just the Bank of England that could issue banknotes. So you'd have competition. And talking about central banks and inflation, I have to give the Bank of England a bit of credit because between 1814 and 1914, inflation in the UK averaged minus 0.4 a year. So they can do it. They can be honest and not inflate. But like you said, if a war starts, I think a lot of our troubles today with inflation started, the seeds were planted with World War I. And it's been, growing, the problem with inflation ever since. So maybe we could change now, look at the title of the video. And the reason I said that, saying this, Clive, that I think it could be a melt up is because the markets are kind of pushing for, a rate cut. I think already in May in the US, we're seeing bond yields drop. Everyone's saying, oh, there's going to be a recession. There's an article here which, the FT, when they push something, it's because, they're quite influential. It's saying slowing inflation piles pressure on central banks to pivot. So there's all these things, but, when I look at these charts, I'm going to show you guys this first one here. When you look at M1, right, which is cash coins, banknotes, coins, and travelers' checks. I know we don't have travelers' checks anymore, but when you look at this, prior to 2020, we were around 4 trillion, the U.S. money supply M1, and we're at 18 trillion. So more than 400% higher. I know it's come off. So what I'm trying to say here, people focus on CPI. They're seeing it come down and say, oh, inflation's gone. But if you really wanted to go back, destroy the inflation that's been created since 2020, you'd have to see this drop to like maybe, if you go on trend, maybe drop down to 5 or 6 trillion, not at 18 trillion. And the same thing goes for M2, you'd want to see it maybe down here at like 17 or 16, not at almost 21 trillion. So that's why I think if they've stopped raising rates, that's the first step. But if they start cutting and then stop the QT, I think we could see a major, move up in all kinds of assets. And we're already seeing gold and silver maybe showing signs that they detect that. So I'll pass it on to you now, Clive, see what you think.
So the real inflation, as I see it, is coming from the government debt market, the bond market of the United States. They're issuing and having to issue about 2 trillion a year on a 20 trillion debt load at the moment. So that's about 10% of promises to issue money in the future. So that 20 trillion going on 22 trillion is basically a promise that they're going to print that money at some point in the distant future. Of course, they can keep borrowing, and they hope that the debt will get larger and larger. That is, in fact, the plan. If you look out at the debt levels 10 years from now, they plan for it to be about 30 trillion. It could well be a lot higher than that. But the real problem I think we've got with the currency systems of the world at the moment, and America's leading the way. I mean, the whole world depends on what happens in the US Treasury market now. The US government has got this plan to just borrow and borrow and borrow ad infinitum. There's no longer the plan that they had 10 years ago of trying to balance the budget. That's gone. And we are heading into a recession. I've done a study today. I've just put up a LinkedIn a little while ago, but it's very clear to me that the US government, or rather the USA, is heading into a recession. The unemployment numbers are starting to rise. I think that we'll probably see a recession declared in maybe 2 quarters from now. I thank you, Mary. You put up my post from LinkedIn there. And as you can see on the chart, when the unemployment starts to rise, we also have recessions. I mean, and the two kind of go together anyway. And if you look at the latest date, you can see the unemployment levels starting to rise in the USA. And so it looks to me like there is a recession coming. I've also looked today at the number of people who are employed in America. The labor force has dropped, the population has gone up. The number of people, they put on another 50,000 jobs in the government sector, and they say that the job numbers were 150,000, but that doesn't look right, because they've got another set of numbers showing that they lost 340,000 jobs in the month. So what I see is the number of people in work going down, the number of people out of work, the unemployment level going up, and we're basically heading into a recession in the United States. Now, what does that do? It means that the government's going to have more problems because it's going to have less tax revenue coming in. It's going to have to fork out more for social benefits and unemployment pay. It means that it's going to have to borrow more, and it's struggling to borrow more in a situation where many international many foreign countries who used to be the natural buyers of American debt are now starting to balk at that. They're not as keen buyers as they used to be. In fact, they're net sellers if we're looking at places like Japan and China. I think the UK has bought a little bit of American government debt, but the natural buyers of American debt are not as many as there were, yet the amount of debt they're going to have to sell to keep the deficit going is just going up. And of course, they've got an awful lot of debt which is going to mature in the next 2 years, which will have to be refreshed at much higher interest rates than the maturing rates. The old debt will be at about 1 or 2%, but they'll have to renew that at 4 or 5%, which will have an impact on the interest rate costs. So we're kind of getting to the end of the road. We don't know where the end of the road is. I mean, that I don't know, but at some point we'll get to the end of the road, and we'll only know it when we've gone past the end. And so what does that mean when we get to the end of the road? It means that the interest rates are starting to become unmanageable for the United States. And that's the point at which the Federal Reserve is probably going to find itself under heavy pressure to step in and buy government bonds. Because if we are in a recession, they need to turn from quantitative tightening to quantitative easing. They need to start printing some money to ease the recession. And when they do that, that's called a pivot, which is what we've been talking about. And when the pivot occurs, basically all trust in the dollar will be gone. The dollar will go down, and that's where we have what we call an asset melt up, because people say, I don't trust the dollar. What else is there? They start to buy other things. They won't be buying other currencies, because other currencies will be going down along with the dollar. So, I think that gold will be one of those things which does very well, but I wouldn't say it's just gold. I think it's asset classes in general which have value, and that would include equities and probably Bitcoin. But I mean, I'm not going to say one should buy Bitcoin, but certainly all kinds of tangible assets are going to do well once the Fed pivots, because that's basically going back into printing phase. They'll start printing money again, and we'll be off to the races. If you're an investor in anything other than cash, if you're investing in cash or bonds, you'll be losing money.
Yeah, someone asked if there's a UK debt clock. There is national debt clock. I think there's another one. Yeah, so almost 3 trillion pounds. I think our GDP is about every year is just over 2 trillion. So this is well above 100% of GDP, I would say. Not surprising. Someone asked here, Clive, about whether they would Powell would be sacked if he didn't cut rates. I'm not sure. I can't tell, but one thing that happened last week, he spoke at a university, I think, and he reiterated, and all the media said, oh, he's ready to raise rates again if inflation comes back. And despite that, gold and silver had a really good day. Normally, if he had said that, you would have seen bond yields go up, gold and silver go down. So it seems like the market doesn't really believe him. What do you think?
You're right. The market doesn't believe his words. The market is anticipating that sometime in the middle or late next year, we'll start to see the interest rate cuts. And the market is also anticipating that at some point the Fed will be forced to act by getting involved with the treasury market, i.e., printing money and buying treasuries off the government, because the government won't have anyone else to sell them to. So I think the market is looking beyond Powell's words and saying, even though he's probably quite resolute, he'd like to keep rates where they are. I think, although he's even saying he might raise them, but I think he'd like to do that. But the pressure will be on for him not to do so. And we must remember, he's not going to be absolutely alone in the Federal Reserve. There'll be other people who've got political aspirations, and they will probably want to please their masters. So I think that at the end of the day, the Fed will do what the government is expecting. Don't forget, 2024 is an election year, and there'll be a certain number of expectations that they get the economy going, and there's lots of jobs being created. And the way you do that is print money and throw it at the economy and spend money. And so that's what I think will probably happen towards the end of 2024.
Yeah, someone's asked about Comex. They're saying, I'm interested to know your thoughts about Comex and how they're dealing with the gold price when they have to cover the shorts and the contracts mature in a week. Well, first of all, the contract doesn't mature in a week. What happens right now, we're in December, and the December contract is basically a deliverable. It's deliverable the whole month. So if you're short the future, someone can come and ask you to deliver it. So it's not in a week, but they have the whole month of December. I mean, usually there isn't that much delivery going on in gold and silver, but yeah, they would have, these are the shorts, not Comex, but the bullion banks, they'd have to cover it. And maybe that's why gold has been going up. What's your view, Clive?
Well, everything's fine if gold moves up slowly. Most of the traders on Comex and other exchanges are basically they're rolling over their contracts and it just keeps going. But if there's a sudden spike in the gold price, let's call it $500 or something, or $1,000. I'm not saying that's what I'm predicting, but if it happens,
that'd be nice in the day.
well, it would cause a lot. It would cause a lot of problems for the bullion banks who will be short net.
That's
And
good.
you may remember what happened to nickel a couple of years ago
Yeah.
when the price went literally, I don't know, went up to 6 or 7 times what it should have been, and the exchange basically closed down the trading in nickel and cancelled all the trades because the exchange was on the hook to pay up to the people who are long, and but on the other side, the people who were short weren't able to deliver to the exchange, so the exchange was going to be losing money. So they basically, now they're being sued by the people who are long and didn't get their money and had their trades cancelled.
Clive, there's some news on that. Last week, the UK High Court ruled that the people suing, ruled against them. So yeah, so they said that the exchange did the right thing. So there you go.
Sounds like the Hunt brothers all over again, where the big boys gang up against the small guy.
Yeah, because that's not very good for the people's confidence in the exchange. Why would you want to trade in that exchange if they can cancel trades and the High Court says it's okay? Clive, the real Scott is asking, ask Clive how far away his thesis is from being rolled out, i.e. currency failure and CBDCs being reintroduced. So
that's a good question. So let's just talk about the phases that I see happening, and this is just a possibility because there are other scenarios. First of all, we talked about the central bank digital currency, which is, whilst it's will be one-to-one against your existing currency, you'll be able to move money from your bank account to your CBDC wallet in your bank, or from your bank account to your CBDC wallet in your pocket, and it'll be one-to-one. There will come a point when the currency situation is out of control, maybe the bond market's collapsing, maybe the currency is collapsing, maybe the shops are being emptied, where they say to you, sorry, but your CBDC wallet now has to be used for all transactions. You can no longer use your bank account. You've got to move money from your bank account to your CBDC wallet in your bank account, and then you can do the transaction. So there's a limitation on what you can use to spend. It will have to be 100% CBDC. And then because of the crisis, they're going to say, we're going to limit to you how much you can put in your CBDC wallet. It'll be 100,000, 10,000, 1,000, maybe 1,000 a week, or whatever they decide. We don't know what the limit will be. They're talking about £20,000 initially in the UK. And when you find you've got to use the CBDC and you can't use any other type of spending, and you have a limit on how much you can put into your CBDC wallet, it means the rest of the money is effectively defunct. It's worthless. You can't spend it. So that would be the way we move to a currency reset fairly painlessly. I say fairly painlessly because it would be very painful for a lot of people, but from the government's point of view, fairly painlessly, because they're kissing goodbye to their national debt, which will now be left behind in a currency which is defunct. But of course, there will be a lot of losers when this happens, and the losers will be those who hold bank balances or large bank balances. Maybe the man in the street will be just fine. But those who have large bank balances or who hold government bonds will be net losers when this happens.
Yeah, and also pension funds, people who have private pensions through their employers. they will get hurt really bad because they hold a lot of bonds because these pension funds are told to hold bonds. So yeah, it will be someone will lose out. It's like when people say, "Why can't we pay the national debt?" Well, because if you or cancel the national debt, if you wipe out the national debt, you wipe out a lot of creditors. Clive, I did a little bit of looked at some numbers because you're aware, of course, that gold closed at an all-time high, I'm sure. And
Yeah.
I wanted to see, well, in dollar terms, year to date, gold is up 14.2%. And I think the S&P is up like 16 or something, or maybe a little more. But isn't it just like a very few shares of the stocks in the NASDAQ that are really up? You know, like the Magnificent Seven.
That's right, Mary. I look at an index which is called the MSCI World Equity Index,
Yeah.
equally weighted. And that's just up a few percent this year
Oh,
because it's equally weighted. So if it was dominated by the big stocks in America, the top five, which would be 10 or 20% of the index, then it would be up a lot more. So when you look at the S&P 500, you will find it's up a lot more than most people's portfolios have performed because most people's portfolios
yeah.
haven't got 10 times as much money in those top five stocks as they've got in the rest of the stock. They've got the same amount in each stock mostly. So most people will not be doing as well as the S&P this year.
Yeah, so yeah, I think it's not a good indicator. The MSCI would be the better one, the weighted. And it's interesting because the in pounds, gold is only up 8.3%. But if you look at last year, in pounds, gold was up 11.6, while in dollars it was down 0.2. So I think I've always said that these fiat currencies, they take turns to depreciate against gold, and this has happened this year, which is interesting. So yeah, the pound up 8.3% this year to date. The euro is up 12, and it was up 7.3 last year. So it looks like the euro and the pound, they've lost almost 20%, while the dollar's lost about 14%. But the one that's really interesting is the yen. It was gold was up 14% last year, and this year it's up 27%. So the yen is really winning the race to the bottom. And
Well, the Japanese have got a very special situation because they got an extremely low interest rate. They still got their 10-year bond below 10%, and that's being held there through
1%,
what's called
below 1%. You
yes,
said
but
one.
sorry, did I say 10? I meant one. It's being held there through what's called yield curve control, which basically means the central bank is buying that 10-year bond and printing money. And as they're printing money, that's effectively devaluing the currency because the more currency you've got printed, the less it's worth. And as the yen goes down, it means the price of gold in Japanese yen rises.
Yeah. Hello, Mario and Clive. Would life insurance companies uh, I assume you mean do well after the collapse of the economy? Um, I'll let
Generally not.
yeah,
You know, it doesn't matter what sort of insurance you've got, even if it's life assurance, claims tend to rise when the economy is doing badly. But you can rest assured what life assurance companies are very good at doing is as soon as they see signs that the claims are rising, they also put up the premiums.
yeah, and they also hold a lot of government bonds, I would say, don't they?
They
Probably.
have to. They have to because they don't know when they're going to have to pay out.
Yeah, yeah. I was listening to have you heard of Jim Grant, the interest rate observer?
No, no, I
Yeah,
don't know him.
yeah, and he's based in the US, and he had Jim Bianco on, and they're talking about the bond market, and they both said that they think we're in a bear market, and the rallies in bond prices and drop in yields that we've seen, they're just counter trend now. And I agree with them. They think that 40 years of bull market is now finished. To 1981 to 2020 21. Is that the way you see it too, Clive? Or
Well, I remember back in it must have been about 1982, and one of my older colleagues, I was a young chap back then, was telling me about I could buy these gilt-edged securities, and I think they were yielding 15, 16, 17% at the time. And I took his advice and bought them, and they did, they did very, very well until they matured long before interest rate went to nothing. But interest rates standing well below the rate of inflation, and as they were, and still today, effectively below the rate of inflation, doesn't make any sense. It's not a form of saving. So I think people will be looking for other things, and that does to be either the interest rates will go higher, or money will lose it, could just continue to lose its value. I would not be a buyer of bonds at these interest rates. I mean, when I say interest rates today, I'm talking about 4.5%, 5%.
Yeah.
I think they will go higher. I think we're going to see 5% again. I think we'll see 5.5% this year, probably.
Yeah, and what if the central banks, the Fed, ECB, Bank of England, started acting like the BOJ and try to drive yields lower? I mean, do you think they could do it? Maybe in Japan it's easier because they have the savings, private savings are really large there, and they don't have too much foreign debt. But I think if they try to do that, yes, they could take yields back down to 2-3%. But we would see our currencies do what the yen is doing versus gold.
Yeah, I mean that when you enter the bond, when a central bank enters the bond market and buys the bonds that the government is issuing, it means the central bank prints that money. One side of the balance sheet is the money it's printed, and the other side of the balance sheet is the bond it has bought, the asset. So you've got the money printed as the liability, the bond is the asset. Now, that's not what the Federal Reserve has been doing for the last year or so. They've been doing quantitative tightening, which basically means they've not been printing any money. But there will come a point when the government can't sell its bonds to the public at large, or at least not at these interest rates. And the interest rates at which the public at large would buy them are probably going to be too high for the government to afford. So the only way out is for the Federal Reserve to step in and start buying these bonds. And that means the Federal Reserve will have to print the money to buy the bonds. And as it starts printing the money, the whole world will do it in a microsecond. And that does mean the dollar will go down, and it will go down a lot. And as it goes down a lot, it also means that asset prices will rise. And we have a lot of precedent for that, because when back in the 1930, 33 and 34, when they revalued gold upwards, or rather devalued the dollar downwards, on those days, the value of assets, the stock market soared, and the price of gold soared, although technically they valued gold upwards, but the reality was all around the world, the price of gold went up and the stock markets went up because suddenly the dollar was worth that much less.
Yeah, and some of the commodities also went
Yep.
up in price versus the dollar. Do you think they could also force, insurance companies, pension funds to hold more government bonds as well? That they could do that as well, couldn't they?
I call that a bail-in. There's been precedents for that in some countries around the world. I think Brazil, you probably know about that, was one of them, where people who held large balances in the bank were forced to effectively lend the money to the government, and by the time they got it back some years later, it was basically worthless.
Yeah.
And so it wouldn't be without precedent that you tell the large holders of financial assets that they have to have a larger slice of government bonds, and that would be another way of kicking the can down the road.
Yeah. William, PMCD is asking whether we have any comment on nuclear power or uranium.
Well,
Do you follow that?
I don't follow the price of uranium, and but I do think it's a bit of a shame that many countries have decided to give up their nuclear power, because it's a fairly cheap form of power. It doesn't carry the dangers that we saw with Windrush and the Chernobyl and the accidents we saw, Fukushima in the past. The power stations that they build today are very, very safe. And I think that it would be good if we could have nuclear power in most countries and not be so dependent on Middle East oil.
Yeah, I mean, I've done a few videos this year like paid promotions for some uranium companies, UEC, Uranium Energy, and also UROI, Uranium Royalty, and they've done really well. The uranium price, as you can see here, this is the spot price. It's at a yeah, it's at the highest level it's been in the last 4 years. That's the spot price, and this is like a long-term price. So yeah, there is a bull market. I think in the US, uh, nuclear energy, civil energy, is like 20% of all the all the electricity is generated comes out of uranium. And the US itself, there's very little uranium mines in the US. A lot of it comes from Russia, Kazakhstan, and the old Soviet countries. So yeah, there is a in the West, now with all the geopolitical tension, needs to a lot more uranium prospecting, and I think these companies are all near 52 weeks highs, 50-week, yeah, and I think China as well. They're building loads of nuclear reactors over the next 30 years. They're building loads of nuclear reactors, and it's relatively clean energy. It could be like a way to get away from fossil fuel, or if you think it's more, some people don't believe in that they're fossil fuel, but oil and coal and hydrocarbons. But I also heard, Clive, they had this COP 28 in Dubai, or the UAE, and the guy who was chairing that, one of the leaders of that country, said that to abandon oil, coal, and gas would take us back to caves. So what's your feeling about that? I think 84% of energy is still dependent on oil uh, and gas and coal.
I don't see how it could go away quickly. I didn't really pay attention to the COP conference. I mean, the one thing I did listen to was the King's speech, and I thought how well he spoke. And I'm not talking about the words he used, but I'm talking about the pronunciation. He spoke slowly. He spoke clearly. He was speaking to an international audience. Then they brought on some other guy to give a speech, and he was jabbering away. And I was thinking, you're talking to a lot of people whose first mother tongue isn't English, and I wonder how many people are actually understanding a word you say.
Yeah, he was wearing a tie with the Greek flag. The king.
I didn't see it. I just listened to it, but I don't know who it was who was
Apparently,
after the king.
there's a spat between Rishi Sunak and the Prime Minister of Greece because of the Elgin marbles. So I think he was trying to be
Yes,
diplomatic. Yeah.
didn't
So
like him back.
yeah, but yeah, nuclear energy. I think it's a interesting sector. And yeah, as I said, I've done a few videos on it, and luckily those stocks have done well. Uh, profit Profiler X, Bitcoin halving cycle tends to coincide with macroeconomic conditions primarily characterized by monetary expansion, low interest rates. Are you guys seeing the same thing? Well, I don't follow Bitcoin that much, so
I would say that's not true. The Bitcoin halving cycle is a mathematical equation which happens every 100,000 or 200,000 blocks. It's not nothing to do with it doesn't matter whether the economy is good or bad. The time frame to the next halving of Bitcoin will not change because each block is 10 minutes, and we'll get to that point, I think, in April next year. So that's when the halving will take place. It's not to do with the economy at all.
Yeah, I know King Charles spoke well, like his speech was well, but someone's saying here, and I kind of agree, because the monarch is not supposed to take a view on politics, and I think the climate agenda is very political. Andrew Watson saying King Charles should keep his nose out of current affairs. Yeah, well, anyway. Uh, Steve Dent, Rudy looking relaxed. Yeah, he is. Clive wants an OBE. Is that why you praise the king, Clive? Sir Clive?
I don't think I'm going to get one of those. Not if I oppose the CBDC, which I do. So no, I don't think they'll give me an OBE for that.
Yeah. Any view on the precious metals miners, Clive? I noticed mine have now are nicely in the green. About 2, 3 weeks ago, they're massive. Quite not massively. They were down about 10%. Now it's up about 7.
I think I own, at least I'm hoping I haven't sold it, some Newmont Mining. And I also bought, I spoke to you about it on a show a long time ago, maybe 6 months ago. I own some of the, what's known as the GDXJ, which is the Gold Miners Juniors ETF, an exchange traded fund, which basically holds all the junior gold miners. And that one is, it's certainly going to be in profit by now, but it's much more leveraged to the upside than the gold price is.
Yeah.
But you know, if in terms of timing, I can observe that the price is only a fraction of what the price was some years ago. So, you know, those who understand what ETFs are and like to buy shares, I think it's probably not such a bad thing to have a little bit of a play on the upside of these ETFs, which invest in gold mining shares. There's also the GDX, which invests in the gold mining majors. And that one shouldn't move quite as fast, but it should still move faster than the gold price. The reason why gold shares move faster than the gold price is because they have a much more leveraged bet. You know, if their cost of production is, let's say, $1,800 an ounce, and they're selling it for $2,000 an ounce, that's a $200 profit. But if the gold price goes to 2,200, now they're making $400 profit, and effectively they've doubled their earnings per share. So the gold price might only go up by 10%, but the share price might go up by 100%.
Yeah, so this is the GDXJ here. So if we look at 2011, when gold got up to 1900, the GDXJ was almost at 180, and here we are now above 2000, and the GDXJ is like 39. So there's huge potential here in the GDXJ. So I agree with Clive. If you want to play the miners, GDXJ could be the way to do it. I have an ISA where I put you know, tax free, and unfortunately it doesn't allow me to do ETFs. So what I do is I looked at the top GDXJ companies. You can find it in the prospectus, and just buy those separately. It will give you a pretty good you know, mirrors the ETF. You know, if you're in the UK and you have an ISA and you can't really buy the ETF. But
And we should probably mention, Mary, this is not investment advice. It's
yeah,
just
no, it's
what
not
I have
investment
decided to do.
Yeah, no, the same with me. I'm just telling you guys what I do. You asked what we thought about the miners. Here's GDX. Yeah, GDX is not as far away from the high that we had in 2011, but I drew some lines here. So we're still quite far away from, you know, we need to really break above 40 or 38 for it to, I mean, it's still quite undervalued compared to the bullion.
And I think there's another thing people have got to think about when they invest in gold shares. There are most gold shares do not pay dividends. There's a few which do. I think Newmont does, and probably Barrick Gold does, but a lot of them do not pay dividends. And you know, if you like to eat and have an income, you've got to be careful which ones you choose.
Yeah. Oh, here's the silver junior miners ETF, SILJ. So there's another interesting one. Okay. Yeah, as Clive said, this is just we're just looking at it. We're not telling you guys to do it. Let's see if we got any more questions.
Well,
yep.
What do you think of the silver price, Mario?
It looks like it's breaking out as well. But it needs to catch up. I think the gold silver ratio needs to go below 80. I think that's the key level there. Let me have a look here. Let's bring that. So, but no, the silver chart looks like it's breaking out. Of course, is not at the all-time high of 50. So there's a lot of room, I think, compared to gold. You know, if I was
I think
trading,
if something breaks with the U.S. debt system, and we are piling straws on the camel's back,
yeah,
and we're putting more and more straws on the back, and we don't know whether the next straw will break it. But if something breaks, gold and silver will both fly, and they could, we could be looking at hundreds of bucks a day movements.
yeah, I remember it was in March this year when the banks were having trouble. I think gold traded up, and so did silver, didn't it? I think gold,
When people don't trust the banks, where else
yeah,
can they go?
yeah, that was back in March. I let's see, I've got the gold silver ratio. So yeah, this is this was back in 2020 when everything there's a crash. Silver doesn't do well sometimes in crashes, but when it's the monetary system that's under threat, I'm not sure silver will go down. So I think historically this 80 level is really important. So if we're near there, 81.3, so that would be a level I'd look at. But let's have a look at the silver chart. XAG USD. Well, bar chart is saying buy. They're recommending you buy. Sometimes they have strong buy or weak buy. So they just think it's a buy, which is, I guess, okay. But yeah, you see that trend line, we've broken that here, and we broke this level here, which was 25.27. So that was so I think yeah, the next target is like just above 26. And I think if we go above 26, we could be very quickly up. We could even be at 30 by the end of the year. That's how I see it.
Yeah, well, maybe I'll make a comment about the people who want to buy gold and silver coins. You don't want to have too much at home. That would be my first comment. So if you're a heavy buyer, you're probably better off buying a few coins at home and then buying one of these silver or gold ETFs, or you buy the miners. Um, that's to avoid having too much at risk of robbery. But having some gold coins or silver coins at home is a good idea for the worst case scenario when the banks close, if they do close. And if you like it, what I would suggest is try and buy the kind of coins that you like to look at. There are some very, very beautiful silver coins. There's some very, very beautiful gold ones. Some of my favorites are the in the UK, the Queen's Beasts collection, which you can get from the Royal Mint. You can probably only get the latest year, but they're very, very beautiful coins. And I
Yeah.
also like the Australian lunar collection. I managed to go down to a gold dealer and was the other day and was very lucky. They got 40 of the latest Australian gold snake, which is we're the year of the snake this year. So every year the Australians publish a lunar coin corresponding to whatever the Chinese lunar year is. There's 12 of them,
Yeah.
and this gold company had only got 40 coins in. They'd had them in the day before. They'd already sold 25 of them by the time I got there. So I managed to get one of those. I was quite pleased.
Mm. I mean, as for the storing or buying ETF, I would prefer storing it with like let's say gold investments. They have a private vault and they're outside the banking system. But yeah, like what Clive said, you have to be careful and but always hold some because I think you'll need it, especially silver. And yeah, think about the dirty man safe as well. That's something that you could do. Hide it. You get 10% off if you use Maneco 10. All the details are below in the description. The dirty man safe. We've got a super chat. Uh, walks and all. Thank you. You two are my all-time favorites on YouTube. Thanks for all the knowledge you share. Oh, you're welcome. That's a nice.
That's a nice comment. Thank you very much.
Yeah,
What a nice comment.
Clive, you said the beasts. These are really not. They're like 2 ounce coins.
That's right. They're 2 ounces.
Yeah,
Um,
really
and
nice.
yeah, so that one's the White Lion of Mortimer.
Mortimer, yeah. And
What
there's
year is that, Mario?
2020.
Yeah, that's a lovely coin.
And it's 2 ounces, so it's quite chunky. And this one is it's got all the Queen's beasts, and it's got all the different beasts.
Yeah, that's called the completer coin in the UK. It's a 2 ounce coin,
Yeah.
and it's called the completer because it's got the full collection on one coin.
And it's what year is it? I think it's 2020, 2021. It's very small, says there. And I don't know. I got some from someone in the States sent me these 20 gold eagles,
Okay, they're nice
one
eagles,
ounce.
yes.
They're beautiful coins, and
Hmm.
walking liberty. Yeah,
The
yeah,
Liberty's on the other side of the eagle. Is that how
yeah,
it is?
yeah, yeah.
So the correct name for those coins would be the eagle, not the Liberty. Am I right, or is it the other way around?
Uh, they call it gold eagle, I think. Not gold eagle,
Okay.
American eagle.
Yeah.
Yeah, yeah, American eagle. Yeah, ASC, American Silver Eagle. I mean, I think those they're going for like $34, so quite a bit of a premium.
I
Uh,
mean that's the thing. If you buy coins, you're always going to pay somewhat more than the silver value.
yeah,
So you're not buying if you're buying coins, you're not buying them with a view to make money. You're buying them as a sort of insurance fund, and you're buying them to enjoy looking at them, to enjoy holding them. If you want to make money, you've got to be in you've got to accept the risk of being in the financial markets and trade a financial instrument where you can move in and out at the market price rather than the coins where there's a big difference between buy and sell prices.
yeah, yeah. And I think the other thing is the premiums are not that high right now for gold or silver, which shows that the sentiment is not really bubbly in gold or precious metals, and I think that's a good sign. What do you think, Clive? It's a sign
I'm
that it's not probably not overbought.
um, I'm quite happy to buy silver and gold at today's prices and with the premium I pay. So just to give you a sort of indication what I'm having to pay here in Switzerland, it may be different where you are.
Yeah,
For gold, if you're buying a new coin from a reputable dealer, you're paying anything from 130 Swiss francs to 200 Swiss francs over the gold price per ounce. If it's a very common coin, it might be the lower end. If it's a little bit unusual, it might be at the higher end.
mm,
And for silver, I would say it's quite easy to pick it up on the auction sites and from dealers at around 15% over the silver price.
mm. I see. Okay. Someone is asking me if I could put the closed caption. I'm not, I'll have to check. I usually can do it for the normal videos, but not on the live stream. I'm sorry if that's a problem. Oh, the other thing, no capital gains tax on UK coins. There isn't. Coins of the realm, there's no capital gains tax, and I think that has been one of the reasons why. Well, not the only, yeah, one of the reasons, not the only reason why I've stayed away from cryptocurrencies, because if you look at this, Clive, and the viewers as well, I think they're gonna start cracking down, not just in the UK, but worldwide. HMRC urges crypto holders to disclose gains. Experts warn of tax authorities' renewed focus. And from this April, I think the threshold from capital gains is dropping quite considerably. I think it used to be 12. It's going to drop to 6
Yeah.
this April, and then 3 the next April. But with sovereigns or Britannia's, any coin of the realm, if gold goes to 10,000 pounds and you bought, 100 sovereigns, there's no capital gains tax.
Yeah, I mean, it's not new for HMRC to issue warnings to people they think might not have paid their full whack. I remember a few years ago they issued a warnings to all British holders of overseas properties who they suspected were renting out their properties and not declaring it to HMRC. And then there was the time when they started. They thought that everybody in Switzerland was not paying their tax, and they started issuing letters to all the the Swiss banks were reporting to HMRC anyway, but then they started issuing letters to all these people saying, "Have you paid all your tax?" I think, in the end, they collected some fairly minuscule amount from these letters. I can't remember the figure now, but it was much less than they expected.
You know what I think is the best way to collect a lot of taxes that haven't been collected is to say, oh, we're going to drop the rate from 40% to 10 and declare, like they call it, an amnesty. And I think they'd get a lot of money because then people would have that thing off their back. But I just I done this chart earlier today and I'd forgotten about it, but I saw it again. This is the price of oil. The price of crude oil in ounces of gold. So how many barrels of oil can get for 1 troy ounce? And the thing that I find interesting, Clive, is you go back to like the early 80s and it's really a steady line. I mean, there are fluctuations. Yep. And there was the spike, which was because of COVID and the lockdowns. But what this tells me is that gold is a really good store of value, even against oil.
Yep. Well, you may remember, Mario, a few years ago, or was that 6 months ago, we put up a chart about the amount of gold that £10,000 would buy you. In 1971, it was something like 630 ounces. By 2001, it was something like 63 ounces. And by 2022, it was 6.3 ounces. I think last time I looked, it was about 6.0 ounces.
Yeah, right now we're at 10,000 pounds. Let's see, divided by 1,630, 23. Yeah, 6.1. Yeah, I think it's gonna go lower though, unfortunately.
Yeah.
Yeah. Let's see if there are any other questions here. Any thoughts in fractional silver coins, 1/10 coins, Clive?
Yeah, well, I saw someone was making a comment that smaller denominations are easier for purchasing and for trading. A small denomination coin or two half coins are worth more than one because they're easier to trade and easier to use. So if you're thinking of buying what's called the silver bags of coins, which are selling by the kilo, try and buy bags of coins which have got for example, the old silver threepence in England, or in Switzerland, it would be the 50-cent piece, rather than the larger 5 franc piece, which is 10 times as much, because you're getting you've got something which is far more divisible. And if you have to buy a loaf of bread, or you want to buy some item where you need to have a small amount of money, the small coins are going to serve you best.
Yeah, and I mean, I have a problem with the term fractional gold and fractional silver, because gold and silver are just, I guess people look at the ounce, troy ounce, but I have all kinds of coins, I actually prefer, I like the sovereigns, which are 0.2354 of an ounce, because they're like a quarter of an ounce, and they're easier to carry, and they're not as they are valuable. They're almost 400 pounds now, but not to 1,600. So I think sovereigns are good too. Someone's asked, gold sovereigns are very easy to sell in the UK. Yeah, of course they are. They're very easy to sell anywhere, right? They're recognized the world over. I think American Air Force pilots, they carry sovereigns when they go on foreign missions.
And James Bond in his novel, in the novels about James Bond, was always carrying sovereigns everywhere he went in the world because that's the way you did your deals.
Yeah, and maybe if we go cashless, sovereigns will be big again. Who knows?
Yeah, I'll have to get myself a belt made where you can, like James Bond's, where you can slot the sovereigns into it.
Yeah, the other thing I have, Clive, I don't know if you've seen these. These are what they maybe your grandfather or your great grandfather used to. You put the sovereigns here. It's a sovereign case.
Oh, that's very beautiful. I like that. I've
It's
never
made
seen
out
one
of
of those.
it's made out of sterling silver.
How many sovereigns would it hold?
You can put three on each side, I guess. That's for a full sovereign, and then there's for a half
Mm-hmm.
sovereign. Yeah, you can. Yeah, quite a few.
When I was about 5 years old, maybe six, my grandfather put in front of me. This would be about 5 years old. He put in front of me a British pound note and
Mm.
a bar of chocolate worth at the time 6 pence.
Mm.
And I took the bar of chocolate, not realizing I could have bought 40 bars of chocolate with the £1. And he and all his friends burst out laughing. So
Yeah,
the next year, when I went back, he put in front of me the chocolate bar, a pound note, and a gold sovereign, which perhaps I don't know what it's worth. Maybe it's worth £3 at the time. Um, and I, having wised up, took the £1 note. And he thought all his friends would laugh at me for not taking the gold sovereign, but it fell flat on its face because the friends didn't know what a sovereign was. Nobody had ever heard of it.
mm.
Because don't forget, they weren't legal tender anymore. They were out of circulation.
Yeah,
And I'm not even sure you were supposed to have any back in those days.
yeah. They might
But
have had some controls. Yeah,
you might have, I think you might have been allowed 5 of them or something like that. But um, anyway, long and short of it was he tried to explain to his friends and me, who was now 6, about Gresham law, but none of us understood a word of it.
this is made of silver. It's like a bullet. Can you see it?
Mm-hmm.
I
Yep.
bought it like last year, and you can put your a sovereign there too on top.
Mm.
You can put a lot more, but I
So
have.
if you fill that, Mario, that'd be about £5,000, I expect.
Well, I think it's like 20. So
Oh, £8,000 then.
yeah, I mean, people say gold is difficult to transport, but with the price going up, you put that in there in your pocket, and you're almost 10,000 pounds. So
Well, that's why people like gold. You can move a lot of value in a very small space.
yeah,
You mix in a couple of sovereigns with your pennies and your shillings, and
yeah,
nobody's going to be any the wiser.
yeah. They don't really know sovereigns, like you said. Your granddad's friends didn't know. Let's see if there's some questions here. Uh, let's see.
Someone's telling you to put some gold buckshot in your little capsule.
All right, yeah, gold bug. Hannah, awesome. Let's see. Most people remain naive about money their whole lives, about work for it most of their lives. Yeah, I think the other thing about the money in the system is that they don't teach people at schools. Even, when I went to the American school in Rio, high school, and it was a good school. And I remember we had an economics class, and the teacher said, yeah, we're going to look at what money is. And she couldn't really tell us. It's like weird, she's supposed to be an economics teacher. I always remember that. She was a really nice lady, though. Her husband played golf at my golf club, but yeah, I think her name was Mrs. Fowler. So I think the problem is the education. And like you said there, the commenter, a lot of people, they're worried about making enough money to keep going, let alone learn about it. What do you think, Clive? Why do you think?
Yeah, I think we're now in an age where if you want to survive, you probably need to have two of you both working, or maybe you need 2 or 3 jobs. I mean, I'm hearing so many stories about people who are literally struggling to pay the bills, on their salary. I was just talking about somebody, talking with about somebody with somebody who I know who is, they're struggling. And this is in Switzerland. They can't get the money together to pay the bills.
It's fun. It's weird because in Switzerland, the price of gold last year only went up 1.1%, and this year is only 6.7. So the Swiss franc is one of the, well, it's probably the best fiat currency. And you're telling me that people are still struggling there. So there you go.
I saw somebody asked a question, it's gone now, but about which were the best silver miners to buy. I don't really know any specifics of silver miners, but what I can say is there's a lot of general miners from places like South Africa and so on who mine a whole raft of metals, including the silver, gold, and copper, and tin, and beryllium, and other things. They, if you want to go and look for them, they're fairly easy to find by just Googling for it.
Yeah, Pete.
And most of the general miners, they pay quite high dividends, as opposed to the silver and gold miners, which are probably a lot lower.
Yeah, Pete Dutois says sending all love from South Africa. Actually, I played golf today. One of the guys I played with, he's lived here for a while, but he's from South Africa. One thing I heard uh, Francis Hunt say, the market sniper in one of his videos, and he's South African. He's there right now. He said a lot of the platinum mines are having trouble because they have problem with energy. In South Africa, a lot of the the energy keeps going off. So you might want to think about that. But silver miners, I think there's Hecla mining is always an interesting one. First Majestic. I think Coeur d'Alene. I think is it Coeur d'Alene? I mean, I think it's the name's changed. But what I would do, I would go into the silver miners ETF and look at the major holdings if you don't want to buy the ETF. That's what I did at first years ago when I wanted to buy miners. I looked into mining ETFs and looked at their holdings and then try to match it.
Talking of First Majestic, I went to, this is 6 months ago, I went to the silver dealer. He had these tokens with First Majestic written on one side and a map of Mexico on the other side. And there were 1 ounce tokens, and there was a 5 ounce one too. And he was willing to sell them to me at a very modest price, basically the silver price plus a small bit extra. So I bought them up, and I wrote a letter by email to First Majestic asking them about the tokens. And they said, "Oh yes, we used to give these away when we did conferences. We'd go to a trade fair, and anyone who came up to our stand, we'd give them a silver token." So I wrote back and said, "Well, when are you having your next fair?" They wrote back and said, "Oh, we don't give them away anymore. The price of silver's gone up too much."
Yeah. Someone asked what's Rudy's favorite human food. Well, he likes popcorn a lot. He likes chicken. He likes cheese and ham, all the usual things. But yeah, that's Rudy. Someone's saying here that the where is it? That coin, one of the coins. Is that the 1 ounce beast coin in the UK is trading for over £2,000 an ounce, which I wouldn't buy that one because you can get stuff for less for 1 ounce.
Yeah, I could confirm that because I bought the 1 ounce, and I just remembered it was the Black Bull of Clarence, which is one of the Queen's Beast coins in gold, and it was only 2 or 3 days ago. And I got this from a very reputable, well-known dealer, and I paid less than 2,000 francs. So that's much less than £2,000.
Yeah. William PMCD, any comment on a platinum substitute catalyst made from spinach? October 2020, Google shows 3 articles about this, and I haven't heard about this.
Well, we're laughing, but it probably would turn out that spinach does something wonderful. It's the next biofuel, or who knows what.
Yeah, Clive,
I don't know what he's talking about.
We've gone over
Okay.
the usual time, so I guess we're having a good time. So it's 22:08. So yeah, thank you everyone for showing up to the live stream and all your questions. Clive, thank you again. I really enjoyed and wish you a good week.
Thank you, Barry. And if anyone wants to hook up with me, I'm on LinkedIn. That's the way to get in touch with me.
Yeah, Clive Thompson on LinkedIn. And let's see what gold does. It's going to open in about 50 minutes. Hopefully we'll be trading at 2,500. That would
That'd be
be
good.
that would be limit up, I guess. They would stop trading for a few minutes.
There would be a lot of people badly hurt because they're at the wrong end of it.
I'd love to see that though, the bullion banks. Anyway, all right. Let's